Hello everybody, welcome to the market briefing for the weekend, Sunday, June 12th. Let's take a look and see what we got going on in the markets right now. First, quick little disclaimer, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading decisions are investment decisions are your own and done at your own risk. So coming up this week, not much going on Monday. There's one of the Fed guys is speaking, but I don't think it's very important. On Tuesday we have producer price index. That's sort of another inflationary print similar to the consumer price index. This could give us a bit more of an advanced look, I think, with regards to inflation. So it could be really interesting if this comes in light, although there's no expectations that it will. But if it did, that could cause a bit of a rally and interesting timing ahead of Wednesday's FOMC meeting. So the FOMC meeting, runs 2 days, starts on Tuesday, finishes up on Wednesday with the rate statement at 2 o'clock in the afternoon. Then 2:30, Jay Powell's press conference. And the press conference is usually the thing that gives us a bunch of volatility. So on Wednesday, we're all expecting a half a percent rate increase. But there's been a lot of talk in the last couple of days, well, since Friday, about maybe they're going to go 75 basis points. I would be shocked if they did that. The Fed really likes to telegraph, their intent, what they're going to do, so they don't shock the market. And a 75 basis point rate hike would shock the market and would not be good. That would definitely send us to new lows for sure. So. I don't think this FOMC meeting on Wednesday is going to be as big a deal as CPI on Friday turned out to be. On Thursday, we have housing starts and building permits, and I think this could be really interesting because, housing is such an important part of the economy, and this could be also give us some advanced clues to what's going on. So I think that Thursday's housing starts is going to be watched closely. On Friday, no real economic numbers that we care about, but Jay Powell is delivering welcoming remarks at the inaugural conference on international roles of the U.S. dollar. So the U.S. dollar, as we'll see in a sec. Now, we've been talking about the U.S. dollar a lot in these market briefings. And the U.S. dollar last week had quite a move, and we're going to take a look at that in a sec. So this on Friday could be quite interesting. Could set up big moves for the U.S. dollar. We'll see how, I'm not entirely sure how currency traders are going to react to anything that Powell says about the dollar, but react they probably will. So that's our week ahead for the macro econ. This is the wrong one. Let me see if I can find us. My apologies. Where is my earnings whispers? Here we go. And why is it not downloading properly? Yeah, okay, sure. As soon as I need this to work properly. Here we go. All right, let's take a look at this way. All right, so as you can see on Monday after the close, we have Oracle. Not much else there. I don't really see anything interesting on Tuesday before the open, or after the close, or Wednesday, nothing at all. Thursday before the open, Kroger maybe. Grocery store chain, right? And then Thursday after the close, Adobe. So really the big ones for the week are Oracle after the close on Monday and Adobe after the close on Thursday. Okay, let's get back to that. So that's pretty much our week ahead. Let's take a look at the markets. So here's really pretty much all you need to know about the markets last week. Nasty, right? A lot of red. The only space that wasn't entirely red was the energy space, but you can see even in the energy space a fair bit of red last week. So obviously caution warranted moving forward here. Let's look at our let's take a look at our charts. We'll look at that one later. Let's look at the S&P 500. Always start there. And as you can see, you know, that base we were talking about for, you know, a couple of weekends now, totally broke out the downside of that, which is really unfortunate. And, you know, I mean, the reason we had such a big move is because the expectation with this base on base pattern and this nice consolidation here is that we're going to break to the upside. So that when we break to the downside, anybody who is front running this, anybody who's already positioned long in this consolidation, well, their stops are going to be right down here. So, you know, on Thursday, stops get run, we move to the downside. And then on Friday with the CPI number, you know, we just continue to move down. Now, interestingly, on Thursday, this move happened. In fact, let's take a look at the intraday chart on Thursday, because I want to show you something. I don't want to be all conspiracy theory here. However, oh, this is odd. Okay. Let's look at this 50. I don't know why my 5-minute chart isn't updating properly here. All right, yeah, we can do this on a 15-minute chart. You can see intraday, the intraday chart on Thursday. You know, we had gapped down a little bit and we went sideways most of the day. And then late in the day, some rumors started coming out that the CPI number was going to come in poorly, and they started selling like crazy. It turned out those rumors were correct. So, you know, is this information leaking out to the market ahead of the number? Sure, looks like it was. But you know, this should have been a big clue to us on Thursday, because, you know, even though we're down a little bit and going sideways, that's kind of what we would expect the day before the CPI number. But once we started falling hard here, you know, we should have known that there's potentially really bad news. And it wasn't until the following day that I found out that there had been rumors that the CPI number was going to come in really poorly. And then you can see here in the pre-market, when the number came out, we just started dropping really hard because that CPI number, as I'm sure you know, came in really hot. So inflation, you know, higher than we expected. All right, let's go back to our daily chart. So on the daily chart, we can see, you know, having broken down through there, we are now nearing the bottom of this space, and, you know, and potential major resistance down here and around the 380 level. So do we hang around the bottom of this space, or at least above the 380 level through Monday and Tuesday and into Wednesday's FOMC? I kind of think we do. I think that barring some unknown major catalyst, I think this level kind of has to hold going into the meeting. We already know what to expect out of the FOMC. Now, if there were any surprises at the FOMC, then we can certainly break below this 380 level. And if we do that, I mean, I've got to start drawing in some other levels. I've already drawn in, you know, sort of this next area of support, which is in the 370 to 365 area. But I don't expect to see us break down through here unless there's some unknown catalyst comes along, or unless, you know, the FOMC on Wednesday gets especially hawkish. So let's look at the NASDAQ. We'll look at the Qs. Much the same thing going on here. You know, we had a nice consolidation. We broke down and, you know, broke down out of that consolidation and moved quickly to the downside. And again, we've got a little bit of support down here. IWM, the Russell 2000 small caps, had been outperforming the rest of the market and, you know, fell a little bit less. Still looks a little stronger than the rest of the market, although very weak, and potentially coming into a very important support level here. What else do we want to look at? Oh, volatility index. Not so. Okay, so look at this move. We've three in the Russell 2000, 3 big red days. Okay, keep that in mind when we look at VIX, because you'd expect to see VIX shoot up, and it did. It did rise quite sharply for 2 days, but it pulled back quite a bit later in the day on Friday, which is interesting. Couldn't even break 30. So, if you're looking for something to be hopeful about, I mean, this is just one little tiny piece of data. But if you're looking to be something you're hopeful about, it's this pullback here towards the end of the day in the VIX. You know what? And this just reminded me of, I mentioned on Friday there wasn't much going on in the macro econ world. I forgot to throw quad witching coming up on Friday, which is, as we know, a big volatility event. And we'll talk about more about that in some of the morning briefings as we go through the week. Yeah, my apologies for not mentioning quad witching when we were looking at the big macro econ events for the week, because it is one of the big macro econ events, and there is apparently a whole lot of puts out there that could be wound down a little bit. They may be buying back those puts, seeing as that we've had a nice big move down, so that could bring some volatility into the entire week as we move forward. But yeah, interesting to see this pullback in the volatility index, and that could have something to do with that put options trade being unwound a little bit after a big move down on Friday. Bonds. So the 10-year yield has moved up quite a bit. So it's spent, we kind of talked about how, or we had been looking at a head and shoulders pattern in this, and that obviously failed. And we've been moving up at a nice reasonable pace until Friday, when we shot up and closed right at the previous high in that. So that's interesting. If we continue at this pace, this accelerated pace, moving out to new highs, that would not be good for equities. The dollar index, let's take a look at that. We've got to move over to TradingView to look at that. Dollar index has shot up over the last couple of days. It came down. We talked about this last week, how it came down and was being supported by the 50-day moving average. On Thursday, that shot up quite a bit. On Friday, it shot up again, and it looks like we'll be coming in to test these highs here through this week. Hopefully not, and hopefully you don't break out above those highs, because I think that this move in the dollar index is completely related to the move in equities, in U.S. equities, and as we'll see in a minute, in the move down in international equities as well. Commodities still seem to be holding up fairly well. Actually, while we're here, you can see, if we look at some of the major cryptos, we can see that they're down today. Now, these had broken through a major level here. The 30,000-ish 29.5 level in Bitcoin had been supporting, and over the last few days has pulled back. But we can see just in the last little while today, we're seeing a bounce off of very near this previous low. So that's very encouraging. Ethereum bouncing, putting in a nice hammer right now. But I mean, when this broke down through this level, this really kind of fell apart. And there is some correlation between equities and crypto lately. Crypto is definitely a canary in the coal mine with regards to risk levels. Are we risk on, risk off, and that transfers over into the equity markets. So something I keep an eye on when I'm looking to see how risk favorable is this market right now, and crypto's telling us it's not, but I am happy to see this bouncing here. All right, let's go back to eSignal here. Take a look at the EFA ETF. This is Europe, Far East, and Asia, or Australia. developed economies throughout Asia and the Far East and Europe. Massive move down. We had been talking about how nicely, how this had been outperforming, how well this had held up. We'd had kind of a bit of a messy consolidation, and it just fell apart on Thursday, and again on Friday with the CPI number. So that's not encouraging at all. Emerging markets, though, held up a little bit better, but they've given up that consolidation as well. So not looking terribly healthy, obviously not risk on. Gold, haven't been too impressed with lately, but we did have a big move in gold on Friday, so this may be signaling something, or it could be nothing. I mean, gold sometimes has these kind of moves and just gives it right back. So I'll be watching it, not ready to do anything with it. Silver, not quite as strong a move, so that may be telling us that the gold move is nothing. Gold miners, if we're really going to see a new rally in gold, we need to see the gold miners outperform. They're not doing it quite yet. They had a really nice day on Friday. But they need to be breaking out above here, and they need to be moving faster than gold is moving. So that's GDX if you want to watch the gold miners. Copper, not a ton going on here other than kind of breaking down out of this. We had talked about this rising wedge, and the expectation is that breaks to the downside. We had a big move late the week before. Out the top of that, and that instantly failed, came back into the wedge, tried to consolidate in that wedge, and then failed out of there on Friday. So it kind of looks to me like there's more downside in copper. Uranium, kind of maybe making some moves here. Had been making a move up, pulled back, and is trying to bounce on Friday. This is the Uranium Trust, one that a lot of people watch, and then Cameco, which is the biggest uranium miner. It's not as strong on Friday, but trying to hang in this upward channel, but getting volatile, and volatility near highs is usually not a good sign. The overall commodities index, still out right at highs. Had a little bit of a red day on Friday, but got its had some losses intraday and got those back mostly. And the agricultural commodities, looking quite toppy here. Some people may start to see the beginning of a head and shoulders top in here. Not really thrilled with the way this chart is looking, but it's not breaking down yet. So if you're in any of the agricultural commodities, this is flashing a yellow light. It's not screaming get out or anything yet, but I would say that if this breaks down, we've got some support levels and lines here and uptrends and everything. Moving averages to watch out for. It starts breaking down through those. It could move quite quickly to the downside as people unwind their positions. Speaking of unwinding positions, it's a fear I have in the energy space. I really like the energy space. I want to be in this space. Long term, I'm very bullish on this space. China's reopening now. It's just, I'm still quite bullish long term and medium term, but short term, I'm getting concerned. And it's not really that I'm concerned about energy itself, it's that I'm concerned about the market itself. If the market starts to break down from where it is, and let's just take a look at this again and see how this might play out. Okay, if the market breaks down from here and we start crashing through these levels, for instance, and what may cause that is the FOMC getting much more hawkish, maybe signaling a 75-point rate hike ahead at the meeting following this one. that could cause us to start breaking down through these levels. If we start breaking down through these levels, we're going to move through them quickly. We could have what looks like a correction. I mean, and you can have a correction in a bull market, by the way. A correction is just a very fast move of 10% or more. So this could be the beginning of a correction right now. If we start crashing through these levels, we're likely to see a liquidity crisis where people have to sell things, forced liquidations, margin calls, where you are forced to sell positions. So what are you going to sell? What are you going to sell when that happens? Are you going to sell your Facebook that is already down so much, a position you probably want to hang on to? Are you going to sell your Apple? A position you might want to sell your Apple because, this is not looking good. This looks like ready to break through major support. But these are positions you probably want to hang on to long term, right? Or are you going to sell your oil and your oil plays that have been doing that's gold. That have been doing so well that you're sitting on nice fat profits in these positions? I would argue you're going to sell these positions that you've got nice profit in. You're not going to want to give back all that profit, and you're thinking to yourself, well, okay, yeah, I'm gonna sell my oil because I can get back in it, and maybe I can get back in it right here at this trend line. Maybe it only falls that far. So I think that if we do have a liquidity event in the market, if there is forced liquidation, if there are margin calls in the market because the market is dropping rapidly, I think we're going to see liquidation in the energy space, even though it doesn't deserve it. So with that in mind, looking ahead and look at the rest of the space, looking at XLE, this did start to come down on Friday, even though crude oil itself pretty much hung in up here and is just going sideways. XLE, the energy companies, the stocks within the energy space, this did start to roll over later in the week on Thursday and Friday. You can even see that on Wednesday with a bit of an indecisive candle here, a bit of a doji here, right? That's not what we want to see after we're breaking out to new highs. Then you can see we broke this accelerated trend line, and we had a couple of days now. We did have indecision on Friday. They did buy it back a little bit on Friday, so that's a good sign. We look at the oil producers. We can see that they rolled over a little bit on Thursday and Friday. And we look at the oil services companies. We can see that these rolled over even more. Now, this could have more to do with the problem in natural gas. There was a fire or explosion at a natural gas export terminal. That caused natural gas to drop suddenly. I think that was on Wednesday or Thursday. We'll just actually pull up natural gas really quick here. I know we don't usually look at that. Yeah, so that would have been on Wednesday, actually, when news of this fire at this export terminal. So if the U.S. is exporting less natural gas, that means natural gas in the U.S., the prices will come down because that means more natural gas for the domestic market, right? So that could be playing into the oil services ETF a little bit. Why it pulled back a little bit on Thursday, or on Wednesday, but on Thursday and Friday, that was all about equities pulling back. And you can see that they were selling those companies on Thursday and Friday. We can see that when we look at Occidental Petroleum, one of our favorites in here, and we had a really nice consolidation, broke down out of there on Thursday. Now, does it find support here at the bottom of this range? Maybe. We've got the 50-day moving average right there. So this will be a tell. If this starts breaking down, it means we're seeing a liquidation event in the energy space. And I'm probably going to be tightening or loosening up on some of my positions on Monday, unless they start bouncing up immediately. XOM, another one of the oil producers. This one's holding up a little bit better, and you can see this trend line. It's right there right now, but if this breaks below this trend line, I think it could move fairly quickly. DMLP, which is one I've talked about a lot. You know, we talked about how this is very volatile, this little stock, and you know, it continued to be very volatile over the past week. Interestingly, up quite a bit on Friday. WES is another one I've mentioned recently, midstream company, and this has rolled over quite a bit, but bounced nicely at that the top of this triangle that we had been looking at. So this is interesting, but not something I want to be in right now. I think this could go either way here. So that's my feelings on energy. If you've got energy positions, I think you want to be watching that space really closely, and I think that you want to not be afraid. And this is not investment advice, but you need to consider you know, whether you want to take some profits here, especially if they continue to roll over. You can always get back in later, right? And you know, if I'm trimming down and taking profits on these, I do intend to get back in later because, like I said, medium and long term, I'm bullish on that space. All right, industrials, ugly on Thursday and Friday. We had talked about Northrop Grumman last week, and you know that did continue this breakout, but rolled over really quickly. Now, does it find support and start moving back up in here? Well, I think that depends on the overall market. Consumer discretionary, another really ugly sector. Retail broke down out of this nice consolidation, much like the market. Didn't break down as much as the markets, though. So, you know, maybe this is worth a bit of a watch. Costco, you know, kind of a little volatile in here, but still kind of hanging in. Still hanging in, maybe consolidating, maybe readying for a move up. Hard to say. It's going to need some help from the market. And by the way, every single sector on last week was red for the week. What else we got? Financials. Really ugly move in financials. People seem concerned about the financial sector. I'm really not sure why. That, you know, the big banks are well capitalized. I see people talking about 2008, and that is not the situation we're in. We are not heading for a financial crisis. The banks are in good shape financially. Now, if anybody has, you know, better funding, I mean, I don't follow the banks that closely, but I do know they're in good shape. And if I'm wrong, please let me know. If you've got fundamental information on the banks that I'm missing, please let us know in the Discord. But I think this is an overreaction in financials, this move down, and I think this is completely fear-based. We are not heading for 2008 in financials. Technology. Technology looking pretty bad too, coming into these to test these lows. Semiconductors. You know, semiconductors, you know, we had a chance to break out to the upside here, and we decided to break to the downside. Now we're coming into some support here and then more support lower. Not sure where this is going to go. Hopefully, Micron doesn't give us clues to where the rest of the space is going, because you can see that on Friday, we broke down through an important support level in Micron. So we do not want to see this going lower, though it looks like it will. Our next major support in Micron is down in around the 55 level. So, you know, we could see some more serious weakness in this one. This is one of the weaker ones in the space, mind you, but I am just not happy to see that support break. Communications, not looking great, coming into right at this support level here. If that breaks, then we're looking, we're looking down and around the 52 level. That brings us into into some of the FAANGs. We had a quick look at a couple of these earlier. Facebook, chopping around near lows. Interestingly, on Thursday and Friday, I mean, it pretty much sideways, but didn't have the complete breakdown that we saw in a lot of the space. Apple, like I mentioned, really important support level, and it looks like that's going to break. Maybe I need to draw in more support areas here. Maybe 131-ish, 131, 132 area is probably deserving as a support line. If that breaks, then we're looking at 128. Amazon, it rolled right over. No reason to believe this won't continue down. Lower, come in and test these lows perhaps. Netflix rolled over a little bit. Not sure what that stop was for. I guess this we're looking at, maybe you could have a stop down here if you play the breakout. Well, obviously, and this was nice too. You hear me talking about, and here's proof that this doesn't always work, and this is why you need to be cautious when you're playing breakouts. You hear me talking about when you have these wider ranges and then you start consolidating at the top of the range, and we look to play a breakout from this tighter consolidation near the top of the range. Well, the reason that we have nice tight stops is because when if that breakout fails to occur, we can have a fast move out the downside of that, and that appears to be what's happening in Netflix right now. Will this little area support right here? Possibly. That's the next area we'd look for support anyway, is right in around here. If that fails, then obviously we're looking at these lows right here. So probably more downside in Netflix. Google. Google, rolled over. A little bit of support. We've got some lows right here it's coming into. Otherwise, we're kind of looking at this. This is all just kind of messy in here, though. Tesla rolled over. It failed to go out, and so it was kind of trying to put in a higher low here. Had a couple of days of moving up, was unable to break above this high and put in a higher high, and now appears to be rolling over. So now are we in a new bit of a downtrend here? I would argue we are. I've kind of made my opinion on this clear in the Discord, and I think in last week's briefing. I think that we see more downside in Tesla. Does this 550-ish area support, 560, 550 area support? I don't know. Maybe that's the next area you're going to look for, next area of major support. If that fails, I'm going to have to start drawing some more lines in here, probably around 460. But we'll see. This pivot here as well, actually around 620. Would be an area we'd look for support as well. We'll probably see a little bit of buying there, and we definitely will see buying here at this 560 area. Is it enough to hold it up? Hard to say. Healthcare. Healthcare is at a major support area. If this breaks down, this could break down really quickly. It also may break down, or it may break down for a day or two. It might fake people out. Have a fake out move down to maybe 122-ish, cause people a lot of pain, and then bounce right back. That can happen too. We can definitely fake out to the downside, just like you can fake out to the upside. But this is really key inflection point here. So be interesting to see which way this goes. So that's obviously going to affect a lot of healthcare stocks. It's going to affect biotech. And is biotech telegraphing what might happen in the overall healthcare space, because we had been looking at this consolidation. We tried to break out of the upside of that, failed, and have pulled right back down, and now we're down to sort of the low end of that little consolidation. Yeah, that looks better right there. So be interesting to see if this breaks out to the downside. This might be a really nice little short here. So yeah, if you were going to go, rather than the health XLV, that healthcare ETF, I'd rather short this XBI, the biotech ETF, if this breaks out to the downside. Watch out for this pivot right here. If you do short it, maybe you want to take a third of that position off. ARKG, the ARK Genomics ETF, another one that might be worthy of a short. It's already broken out to the downside of this consolidation. So does it have more downside? Well, if XBI is breaking down, and this is breaking down too, and this seems to be leading to the downside. REITs, into our more defensive sectors. And you can see that REITs rolled right over, have broken down through a support level, but maybe they're going to support at this pivot over here. Let's get that in there. So they might find support there. If not, they break down and they continue lower. XLP, staples, consumer staples. Have rolled over, tried to get some back on Friday. Hard to say what goes on here. I think what goes on, if the market continues down, then these go down slower than the market, but they're still going to lose you money in the staples. Utilities have rolled over as well. Are they finding support near this area where they found support before? Maybe. This is indecisive. It is a little bullish candle right there, but again, it's a defensive sector. It's going to go down with the market. It's going to go down slower. Home builders, I think I mentioned a week or two ago, or maybe it was during. I didn't understand this move. This move right here, I didn't get it. It didn't make sense to me, because I'm kind of bearish on the home builder space. And I mentioned that I didn't understand it, but it's like, okay, so we had this move, we consolidated. Even though I don't understand the move, that consolidation says you would normally break to the upside. Well, that did not happen. Obviously, we broke to the downside of this. So maybe I was right not to get this move, to be wondering what the heck was going on here. It shouldn't be going up, and apparently the market agrees with me now. Does it find support here again, though? I don't know. I mean, this is probably a level that we're going to be watching really closely on Friday. Remember, I mentioned that housing starts number. So that will be important, especially if we're in this area on Friday. So yeah, this could be some interesting trades in here. We've been talking about TAN, the solar ETF. That has had a nice move. It rolled over a little bit on Thursday, Friday, but look, compared to the market, this has not come down that much. And this may be giving us an opportunity, unless there's a problem in the market, unless there's a liquidity issue in the market. If the market starts rolling over a lot, then this is going to continue to roll over. But this may be giving us sort of a second chance or opportunity to get in this for a continued move up. I don't like it right here. I want more clarity in the market itself, and I want more clarity in this space. But this is definitely something I'm going to be watching. And if the market bounces, I think that this is somewhere we want to be. One of the stocks in there is Sunrun. Even though it's moved down a little bit, it looks all right to me. If it can start going sideways a little bit here, I might buy consolidation out of a sideways move here. Same goes for SunPower. Barely it's pulled back, and should be a lot of support in here. So let's just see this go sideways for a few days, maybe get us past the FOMC meeting, or if the FOMC, if the market decides to be a little bullish after FOMC, maybe this is one you just jump right into. Again, not investment advice, But I think there are trades setting up in this solar space. That's all I've got for you in the charts this week. What have we got coming up? So Nick is should be. I think Nick gets back in town shortly, so he'll probably be adding something to the calendar. I, on Thursday, have Ticker Talk, so hope to see you come out live to the Ticker Talk, or you can DM me some tickers you'd like to look at on Thursday. So hopefully everybody has a good week. Just, obviously be careful. The market is at a real key inflection point here. It's going to be a very active week. We should expect to see a lot of volatility in the markets. So just be careful out there. There's no reason to jump into anything right now. Wait till the market, gives you some proof, some signals, whether you should go one way or the other. I mean, it's kind of signaling you should be going to the downside, right? But if you don't play short, there's no reason to get in long just yet. The market will tell you. There'll be plenty of time, when you should be getting along, especially if you're a longer term investor. So just take it easy. Keep your eye on the market. Watch for clues. Watch for signals. And have a good week. Thanks, everybody.